Here in this video, we will be going over everything you need to know about Fed Jerome Powell today. Some good, some bad. Let's get started. Here was the first piece of good news that came out during the statement at 2 p.m. The program named quantitative tightening. Hopefully you guys know what quantitative tightening and quantitative easing is. It's when the Fed is selling bonds or selling assets. That is quantitative tightening. The Fed has been doing that for years now. For really since 2008 until 2022, the Fed was actually buying bonds, and that was keeping rates artificially low. Well, the Fed just announced, instead of selling $60 billion a month in treasuries or running them off of their balance sheet without reinvesting them, the Fed is now going to cap that at $25 billion. It was expected anywhere from $35 to about $45 billion was going to be the number. So this came in lower than expected. That means less selling pressure hitting the bond market, which means maybe yields can actually stabilize and go higher here. Take a look at TLT. When TLT sees selling pressure, yields go up because the price of the bonds are falling. Just like a dividend stock. If you buy a dividend stock, nobody wants to own that dividend stock, then the yield will go higher if people sell that dividend stock. If everyone wants to own that dividend stock and you bought the stock, well, great, you made some gains, but your yield is going to be lower if you're reinvesting your dividends, if you're buying that stock again, right? So same kind of logic here in the bond market. This was seen as a big positive to markets when this first came out at 2 p.m. But the real reason why markets rallied upon Fed Jerome Powell's speech is because it seems like we are far away from getting any kind of rate hike here. Jerome Powell made it very clear. They're only talking about whether to cut rates or to hold rates for longer. There's really no conversation about raising rates again. Jerome Powell says that monetary policy is still restrictive. Jerome Powell was asked about what conditions would merit raising rates again. And this was the quote, the answer from Powell that really sent the markets rocketing higher. Jerome Powell said, "It's unlikely we will get another hike. We would need to see persuasive evidence to show we are not sufficiently restrictive." And he said the totality of the data, that would be economic data, that would be inflation data, that would be inflation expectations, that would be survey, that would be basically all of the data would have to be pointing towards a super strong economy and inflation that is ramping back up again in a big way. And at this point, that looks unlikely. Jerome Powell said if inflation stays sideways, kind of doing what it's doing right now, then they can just hold rates for longer, and that there could be different paths towards actually getting rate cuts, one of which could be an unexpected weakening in the labor market. And then Jerome Powell added on to that says growth in the economy or labor market itself doing well wouldn't necessarily create problems for inflation. Jerome Powell pointed out, basically this entire inflation fight going from 9% on CPI down to where you are today in the 3s, that happened based on a strong economy and a strong labor market. So he says there's no reason to think that can't continue to happen. But Jerome Powell did take note that it's probably going to take longer than expected. Jerome Powell was asked just bluntly, does he think there is enough time to cut rates 3 times this year, given just where we are in the calendar? Jerome Powell says, I don't look at it that way. I don't know exactly when that will be. And he went on to point out various different reasons you could get a cut, as I just mentioned, unexpected weakening in the economy, further progress on inflation. There's a bunch of different reasons that could get the Fed to cut rates, but it sounds like 3 rate cuts is not coming. The markets were priced for 1 rate cut December 18th. And that's why I was bullish, because a lot of people in the markets were expecting maybe the Fed was going to raise rates again. And yeah, that's not going to happen. We're not even close to that. And that's really the blunt reason why stocks are rallying higher right now. Powell was asked if there is anything that he looked at in January, February, and March inflation data that is a little extra concerning. Jerome Powell kind of looked around, he looked up, he was trying to think of anything, and then he just said no. He says, but we are taking signal that means we are waiting to gain greater confidence before cutting rates. Basically, again, reiterating, it didn't make them gain more confidence that inflation is coming down, but it doesn't really raise any alarms at the same time. Jerome Powell does say that higher goods inflation and higher service inflation this year has been a little, I guess, strange, if you will. It kind of caught them by surprise. Jerome Powell says, I think we will continue to see inflation fall into the end of the year. Over time, market housing rents will start to get reflected in the data. Jerome Powell was asked if the odds of no rate cuts in 2024 has changed, and he said, I don't have a probability estimate for you. We came to the conclusion it may take longer. This was also super bullish, and I posted this on the X account, literally said super bullish. It says, as inflation has come down, we are now focusing on the other goal. We are not focusing on the economy, or we were not focusing on the economy in 2022. It was only about getting inflation down. So now the Fed is really saying, hey, we're in better balance here. We're not just focused on inflation anymore, but we're also focused on the economy staying well, which really just shows, you know, individuals like Tom Lee that have been saying, hey, the Fed's not focused on the business cycle as well as inflation, and that's positive. I think Powell just kind of reiterated that here. Jerome Powell was super funny for this one. He was basically asked about stagflation, and again, he kind of looked around the room and said, I don't see the stag or the flation. And everyone kind of cracked up, but he doesn't really see the stagnating growth or the high inflation. So the Fed is not worried about these kind of stagflationary data reports that we have gotten recently. Jerome Powell was asked if there's greater pressure on the Fed to cut rates because it is an election year. And Jerome Powell said they're doing what they can and doing what they think is the best decision for every single American in the country. That he actually clapped back quite a bit of that question. He said, go read all of the transcripts. He said he has been the Fed president, the chairman of the Fed, in 4 elections. And he said in those transcripts, you will never find any conversation about politics or we should do this because of this, anything to do with politics. It just doesn't happen. So, you know, that's maybe not fantastic. Some people would hope a little pressure would come to the Fed by political bodies to get some rate cuts, but something that I have expected. Jerome Powell says that monetary policy is working as designed. Jerome Powell was asked, how confident are you rents will help inflation fall in the coming months? Keep in mind, housing or rent inflation is still the biggest contributor to overall inflation, and Fed Jerome Powell said that market rents are barely going up at all. Before that, it was very high. Those market rents take years to get all the way into rents for tenants. It just takes some time for that to come in. I'm confident as long as the market rents stay the same, it will show up in the data. But he's not confident in the timing. So it could come soon, it could come later, but he thinks it is coming. And then he was asked a question in reference to, hey, the economy is doing well and inflation is high. How does he kind of look at those things? And Fed Jerome Powell says, we actually have the luxury of having a strong economy and strong labor market and similar inflation to other countries, referencing a year up and saying that was actually good. Jerome Powell was asked, or kind of more like a statement, it says, you backed away from the narrative of the economy needs pain to get inflation down. Can the economy continue without pain to get inflation down? That was what the Fed said back in 2022, that the economy would likely have to go through a period of pain to get inflation down. And Fed Jerome Powell said, most people thought we would need some pain. That did not happen. That is a tremendous result. I think it is possible those forces continue to work to bring inflation down, but that is not guaranteed. We are trying to get inflation down without significant dislocations in the labor market or elsewhere. Jerome Powell was asked if the unemployment rate popped back above 4%, would that catch their attention? Fed Jerome Powell says a couple tenths, of a rise in the unemployment rate probably would not do that. Overall, this was a along the lines of my expectations, and I was bullish for this Fed meeting. Now, the markets were pretty bearish heading into this Fed meeting. We were only expecting one cut in December 18th. Now you're seeing the odds going back up again for the September meeting to be the first Fed rate cut. And overall, I think markets were just way too bearish and pessimistic on the Fed heading into this meeting. Again, markets kind of sold off yesterday, so it doesn't surprise me why stocks are doing well. Look at that. Markets are right back down again. To be honest, this doesn't make a whole lot of sense to me. Now, after all of that is presented to you guys, I just don't understand what went wrong today in the markets. A little bit of, sell the news, of course. The NASDAQ was up over 1% during the highs of the day today. Ended up closing down almost 1%. And you sold off almost for no reason. There was nothing bad that the Fed gave us today. And it really makes you wonder what's going on here. It's possible the markets did not like the digestion or the comments around the economy weakening. Maybe, but like literally everything else was positive, right? The Fed doesn't see a stagflationary forecast. They're not expecting to raise rates. They don't know when they're going to cut rates, but they're not expecting to raise rates again. The economy's doing fine. Labor market's doing fine. The U.S. is actually privileged with falling inflation and a strong economy. Maybe I'm missing something here. But today's Fed meeting was actually very bullish. Again, who knows? Valuations are high in markets, so maybe it wasn't enough because of how high valuations are. But it was a pretty good day overall. Now, if you take a look at bond yields went lower, right? Bond prices went higher. Bond yields went lower during the speech, during the conference, when that report came out at 2 p.m. And then bond yields started to rise a little bit as the markets were selling off. So probably some of the market's downside was due to this slide in bonds. So honestly, I think the markets should have taken this a lot better than we did. At least initially it was taken as a big positive, and then we just sold all of it off again. Now, I think this could create a lot more volatility over the next coming days. We are going to have Apple earnings tomorrow in after hours. We are going to get economic data as well coming out tomorrow, as well as on Friday. Tomorrow, you will get Challenger job cuts at 7:30 in the morning, expecting about 91,000. Initial jobless claims as well, expected to come in around 207,000. You will have exports and imports, as well as factory orders month over month that come out at 10 o'clock in the morning, expecting about 1.8%. Bunch of bond auctions, but that's pretty much it. On Friday, you're going to get the non-farm payrolls as well as the unemployment rate. Non-farms are expected around 238,000. Unemployment rate expected about about 3.8%. Average hourly earnings month over month expected around 0.3%, and average hourly earnings year over year expected about 4.1%. Participation ratio or participation rate expected around 62.7%. So not expected to change there also. So some data that is still coming out. If you take a look at 10-year treasury yields today, 10-year treasury yields are down 5.5 basis points. And it says here for the main headline on CNBC, Dow closes higher as Powell says Fed's next move is unlikely to be a hike. So again, I don't really know why the market sold off today. Could be an opportunity to catch the bounce coming here over the next, couple of days. But I think Apple earnings will be another big catalyst for our markets. Seems like AMD, Supermicro, your AI earnings have not been that great so far. Amazon was okay. Could have been worse. Amazon was only up about 3% following their earnings. Microsoft and Google were really kind of the bright spots of this earnings, and obviously a stock like Tesla as well. But in your big tech world, Apple can be important. So we'll have to see what they say tomorrow in after hours. You will also get Coinbase, Block, DraftKings, Cloudflare, Bill.com, Fortinet, Amgen, Booking Holdings, and Expedia that will report. Now, MasterCard reported some pretty bad numbers, and that sent Block down about 8% today. So maybe some of that is also weighing on the markets. That's certainly a possibility. But again, I'm just really confused what happened towards the end of the day, why the market's seen this as bad or not good after the fact, after the conference itself ended. I didn't see anything that was bad from the conference. So let me know what you think down below in the comment section. Let me know what you think this switcheroo was for the markets. Does this mean or point to markets continuing to fall from here? Hit the like button and subscribe to the channel if you made it to the end of this video. Have a great rest of your day, and I will see you in the next one.